So right now in the market, we are at all-time high with the S&P 500 over the past month up by over 5%. The FTSE 100 hasn't been surprised by the same big hit. It has been battling it out over the past month and is down by 0.28%. And the FTSE 250 never seems to be happy. It is down by 0.2% since the last month. And although the S&P 500 is at all-time highs, I've got a lot of explaining to do for my portfolio this month. So in this video, I will show you all of my Trading 212 portfolios. So let's start with my Trading 212 Invest account, and as you can see, my current portfolio value is £1,529. However, you can see that my account value is very different at £20,969. So there's a lot to be talking about today. You can see that my biggest holding currently is in cash, £19,440, currently getting that 5.1% annual equivalent rate, which is £2.64, which feels good, but I'm not in the market right at the high, right when the S&P 500 could possibly do another 10 to 20%, but who knows where the market is heading. Oh, by the way, if you would like to sign up to Trading 212 and receive a free fractional share worth up to £100, then all you have to do is hit the link in the description box down below. Or if you've signed up to Trading 212 less than 10 days ago and would like a free share, all you have to do is hit the 3 horizontal line menu over here, scroll all the way down until you see the use promo code section, and then enter the code JUBAIR and you should receive a free fractional share. So let's go through all of my individual holdings, and then I'm going to show you why I am actually holding this much cash at a point where the S&P 500 is bursting pretty much. So my first share is still in Walt Disney. I have 0.12 shares in them. Over the past month, Walt Disney has been doing pretty well, up by 5.43%. In my portfolio overall, they are still down by 0.97%. I've held them for quite a bit and they haven't been doing too well overall. They pay a very small dividend yield of 0.81%. And if you would like to, you can actually go in and check out the financials for yourself. I'm not going to cover it in this video. So next I have 35.1 shares in Vodafone. Over the past month, Vodafone has gone down by 1.09%. And in my portfolio overall, they are down by a humongous 18.09%. Now they do have the smallest dividend yield, which has finally been cut, or at least been shown on Trading 212 to be 0.12%. I know that a lot of us have benefited, or at least thought they benefited, from the really high dividend yield that Vodafone was giving. The last dividend I was paid was on the 2nd of August, and that was a very nice £1.33. Very big considering that my shares are worth only £26.21. So next I have 0.01 shares in the Vanguard S&P 500. So over the past month, the S&P 500 has completely blown its top, up by 5.53% on the VUSA, and this is taken into consideration, of course, as a UK investor. This would be in pounds, and the pound and the dollar have exchanged a lot of blows recently. The pound is strengthening, which means the gains that you're going to get on the S&P 500 might not be as high as you have thought, but then again, they've been going up and down. But overall, 5.53% over the past month pretty much is in line with the actual S&P 500. Overall, since buying it, I've actually bought it pretty recently. It is up by 3% or 3 pence. I only have £1 in it, but you know what? It's better than nothing, and it's a nice way to keep tallies on the VUSA. So next I have 0.9 shares in the Vanguard Germany All Cap. So over the past month, up by a massive 4.47%, nearly, approaching S&P 500 territory. But of course, we know that the German economy is nothing compared, to the US economy, but we shouldn't compare those different economies anyway. They do very different things. But in any case, I am up overall in my portfolio with this by 6.83%, and that is a return positive of £1.41. Next, I have 0.17 shares in the magnificent Tesla. So Tesla over the past month actually has been doing really, really well. On the 1st of October, it peaked, as you can see, at $262, now back down to $240. Over the past month, up by a magnificent 11.3%. They have finally exceeded my average buying price, so up by 9.38%. And you can see the FX impact here, which is a negative 4.21%. But I'm not too worried about that. They don't pay a dividend yield currently, and the financials are here. But you can see revenue seems to be increasing year on year quite rapidly at that. So next I have 33 shares in Rolls-Royce. Over the past month, Rolls-Royce has been doing really well, up by 11.63%. In my portfolio overall, they are up by 224%, really high, and that is a positive return of £123.01. They actually don't pay a dividend yield currently, and as you can see here, revenue is going up a bit year by year. So next I have 2.13 shares in PayPal. Over the past month, PayPal has been doing really good, up by 14.29%. And in my portfolio overall, not too bad, a positive 24.61%. As you can see, the numbers are still jumping because I'm doing this live. And by the way, if the numbers change a lot by the time I have uploaded, this is because of inflation data. In any case, that is a positive return of £25.63. No current dividend yield, and you can see revenue is going up very nicely there. So next I have 2.32 shares in Orange. Over the past month, Orange has been tumbling down by 5.85%. And in my portfolio overall, they are down by 11.5%. They pay a very good dividend yield of 7.1%. And the last time I was paid a dividend from Orange was back on June the 6th. And that was 62p. Next I have 0.9 shares in the other magnificent Nvidia. Over the past month, Nvidia has done it again, up by a massive 26%. Now that is the kind of return you'll see in a whole year, in a very good year in the stock market, but done in 1 month. As you can see in my portfolio, they are up by a massive 338%, and that is a positive return of £72.29. They pay the smallest dividend yield of 0.02%. So next I have 0.4 shares in Nike. Over the past month, they've been doing a bit better. You can see up overall by 3.52%. And at the end of September, they were doing pretty well at $89 per share. In case you have missed it, Nike has missed many of its targets, online sales targets, which is one of the reasons why the share price is going down, because people are fearing that other companies such as Adidas are taking over market share where once Nike held everything. In any case, it still does pay a dividend yield of 1.8%. Next, I have 0.49 shares in National Grid. Over the past month, down by 4.56%, and now you can see it is actually below my average buying price of 1,003 pence. So in my portfolio overall now down by 0.81%, but that is just a loss of 4 pence, which I think I'll be okay with. And they pay a very nice dividend yield of 5.88%. As you can see, the last dividend I was paid was 19 pence on the 19th of July. Next, I have 0.16 shares in Moderna. Over the past month, absolute tumble, down by 25.47%. In my portfolio overall, they are down by 35.18%, and that is an unrealized loss of £3.88. They don't currently pay a dividend yield, but one of the reasons why their share price might be down is because their revenue is down big time, and so is their net income. Next, I have the magnificent Microsoft, 0.07 shares in them. Over the past month, not doing as well as the other magnificent 7, up overall by only 2.41%. In my portfolio overall, they are up by only 3.26%. As you can see, an upcoming dividend is to be paid on the 12th of December, so still quite far away there. And the dividend yield is only 0.72%. Next, I have 0.38 shares in Mercedes-Benz. Now, over the past month, they are up by 3.25%. However, in my portfolio overall, they are still down by 10.51%, and I've been holding them for quite a while now. They do pay a very high dividend yield of 9.27%, which I guess could be cut at any point now. So next, I have 343 shares in the Lloyds Banking Group. Over the past month, they are up by 5.24%. In my portfolio overall, they are up by 33.93%, and that is a positive return of £51.76. They pay a very nice dividend yield of 4.88%, and the last time I was paid a dividend was £3.64 on the 10th of September. That is actually pretty good. Next, I have 6.24 shares in Royal Mail. They have been going up and down quite a lot, but ending the month, at least this month, by 0.41%. In my portfolio overall, however, it is doing really healthily, up by 60.81%, and that is a positive unrealized gain of £8.07, and they pay a very small dividend yield of 0.58%. So next, I have 23.1 shares in IAG, and over the past month, they have been going up and down quite a lot as well, but ending the month by 2.94% gain. In my portfolio overall, they are up by 30.71%, and that is a positive gain, unrealized of course, of £10.79. Now they have a dividend yield of 1.07%, and I was last paid on the 9th of September by 48 pence. Next I have 3.1 shares in H&M. Past month doing really well, up by 14.19%, and as you can see at one point they were up by a whole lot more. In my portfolio overall they are up by 18.47%, and that is a gain of £6.37 unrealized, but I have been holding this for quite a while now. Now the dividend yield is pretty juicy at 3.61%, and the last time I was paid a dividend was 53 pence on the 13th of May. Next, I have 0.29 shares in GSK. Over the past month, doing really bad, down by nearly 10%. In my portfolio overall, they are still up by 13.35%. That is a gain of only 53 pence. They do pay a dividend yield of 3.99%. And I was actually paid today a dividend of just 4 pence. So next I have 2.01 shares in Direct Line Insurance. Over the past month, down by 0.16%. So quite a lot going on there. In my portfolio overall, they are now down by 8%, and that is a loss of 32 pence unrealized. They pay a dividend yield of 3.28%, and the last time I was paid a dividend was on the 17th of May, and that was for 8 pence. So next I have 18 shares in Deutsche Lufthansa. Over the past month, they are up now by 10.95%, so pretty good. In my portfolio overall, however, they are down by 26.36%, and that is a loss of £35.26. Now they do have a nice dividend yield of 4.63%, and as you can see from their financials, things are looking a lot better since 2020, where flights were grounded. And the last time I was paid a dividend was on the 13th of May, and that was for a pretty nice £3.44. Next, I have 1.01 shares in Deutsche Bank. Now over the past month, they have been doing really well, up by 12.62%. In my portfolio overall, they are now up by 27.45%, and that is a gain of £2.94. They pay a nice dividend yield of 2.8%. Again, as you can see here, revenue is going up quite nicely, and the last time I was paid a dividend was on the 21st of May, and that was 29 pence. So next I have 1.5 shares in Delivery Hero. Over the past month, absolute astonishing performance here, up by 49.12%, exceeding my average buying price of €29.60, I think. Anyway, now they are up overall in my portfolio by 30.01%, and that is a gain unrealized of £11.56. They don't currently pay a dividend yield, but you can see from the revenue things are looking a lot better than they used to, although net income might need a bit of work. Next, I have 1 share of Carnivore. Over the past month, again, these random holdings that I've held for a while, this one's up by a massive 30%. In my portfolio overall, they are now up by a massive 102.86%, and that is doubling my initial value at a positive return of £7.20. Next, I have 21.06 shares in British Petroleum. Over the past month, they've been doing alright, up by 3.37%. Now in my portfolio overall, because I've held this for a bit now, they are down by 21.8%, and that is a loss unrealized of £24.13. They pay a good dividend yield of 5.64%. As you can see, revenue seems to be down a bit since last year, and the last time I was paid a dividend was less than a month ago, £1.27 on the 20th of September. Next, I have 0.37 shares in BMW. Over the past month, they are up by a nice 11.1%. However, in my portfolio overall, they are still down by 25.18%, and that is a loss unrealized of £8.11. They pay a very good dividend yield of 7.83%, and from their financials you can see revenue is going up really nicely, and the last time I was paid a dividend was a nice £1.42 on the 21st of May. So next I have 0.02 shares in ASML. Over the past month, doing really well, up by 13.4%, exceeding my average buying price of €669. In my portfolio overall, they are now up by 10.96%. That is a return of £1.33. They pay a very small dividend yield of 0.81%, and as you can see from the income statement, revenue is growing very near exponentially. The last time I was paid a dividend was 2 pence, very low amount, on the 7th of August. So next I have 0.42 shares in Apple. Over the past month, up by 3.44%. In my portfolio overall, up by 23.78%, and that is a gain positive unrealized of £14.38. So next I have 1.24 shares in Amazon. Over the past month, up by 6.44%. In my portfolio overall, now up by 70.95%, really nice. And that is a return unrealized of £74.17. And they don't currently pay a dividend yield. And as you can see, revenue looks really good. Next, I have 0.47 shares in Alphabet. Over the past month, up by a really nice 9.13%. In my portfolio overall, they are up by 19.35%, and that is a return positive unrealized of £9.54. They pay a very small dividend yield of 25 basis points or 0.25%. And as you can see, the revenue is growing up really nicely. The last dividend was on the 16th of September, and that was for an earth-shattering 6p. So next I have 0.03 shares in the magnificent AMD. Over the past month, they are up by 18.32%. And in my portfolio overall, they are up by 101.5%. And that is a gain unrealized of £2.03. And they don't currently pay a dividend yield, but their revenue looks really good here. Okay, so the explanation to why I hold so much in cash, well, actually, I'm pretty much of an idiot because, you know, I should be benefiting from the stock market. But what I've been actually doing, which I do not recommend anyone do, is that I have been, buying and selling and trying to make the most out of the market. I've been buying and selling the Vanguard FTSE All-World quite a bit. And over the past month since my last update, I've made £250, 250 something pounds-ish in realized profits, which I do not recommend once again. I probably would have made more in the market, but you know what? At least I'm in cash. At least I'm getting that 5% interest from trading 212. But of course, for all you long-term investors, this is not something that you want to see. You want to shield your eyes away from what I'm doing right now and don't show your kids. But anyway, to date, you can see my realized profit and loss is £3,473. And now I'm going to show you the big change here, which is my stocks and shares ISA. Now, the big news here is that I have transferred my old InvestEngine ISA, which was 2 years of deposits, had around £60,000 in it. Long story there, but that was my free trade ISA that I had from 2021, 2022 tax years. And then I transferred it to InvestEngine, and now I've transferred it to my Trading 212 ISA so that I have all my ISAs in one place. You can see insanely, I have £105,553 in cash out of the market when there is all-time highs. What an idiot I am. Or am I? For all of you watching here, this is not something that you should do. My ISA transfer probably happened at the worst time possible because at that time, after selling off all my holdings in cash, because InvestEngine did not allow me to do an in-specie transfer, I transferred everything in cash here, was out the market for a couple of very, very crucial weeks, and then could not find the time to, put my money back in at a point where I could put it into the VWRL. So as you can see, I wanted to actually buy into the VWRL at £103.32. That would have been the same price as I sold out on my InvestEngine account. But as you can see right now, time in the market is everything, and being out of the market is one of the worst things you can do because currently the price is a staggering £106.40. And for those of you who could do math, guess how many shares I could buy with £105,000 and guess how much I would have been up by now. But you know what? I will get back in the market, but right now I have a lot of cash. So for those of you who are curious, I have £105,553 in cash, currently getting that 5.1% from Trading 212, and that is a daily interest of £14.37. And this point after the 37 goes up by about 2 every day. So yesterday this was 14.374, today it's 376, tomorrow it might be 378, and eventually it will be £14.38. Here are my payments since the 1st of October. As you can see, I had less cash here when I was getting £8 and then 14, slowly going up from 14.36 to 14.37, then it will be 14.38, providing I keep my cash there and providing that Trading 212 keeps its interest rates high. Currently, the 5.1% interest rate is staggeringly high, higher than the Bank of England's central rate. So I don't know how Trading 212 is exactly doing that. You can see only 32% is in qualifying money market funds, the rest is in cash. In any case, this much cash would not be fully covered by the FSCS as it's over £85,000, but I'm willing to take the risks. Being out of the market itself is a huge risk, but just in case the stock market crashes, I will be the one to celebrate while everyone else cries, but just in case. So make sure to check out some of my other videos and I'll see you in the next video.